This is Anthony Nunez, and today I'm going to do a video on student loans. So it's going to be a two-part series. The first one is just some general information. The second video, part two of this one, is where I throw in some more personal finance into it and something that's going to, I think, catch more people's eyes or ears. So the first part, should you take out student loans? Please subscribe to the channel if you find value in the content provided. This video was created for educational purposes. Please consult with your local professionals for any case-by-case financial assistance or advice. How do I attain a loan for college? Well, you attain a loan by applying via the FAFSA or the free online application, free application for federal student aid. This gets filled out every year. So financial aid is a first come, first serve ordeal where the earlier you apply, the better. Okay, so remember to fill out the FAFSA early. And keep in mind that many packages, when you get your package from the university, which usually happens in the spring, many packages decrease over time. So if you're getting offered, $20,000 for a $25,000 school, you might find that the next year might be $15,000 and your junior and senior year might go down to like $10,000. So you're going to want to make sure you keep an eye on what's the 4-year commitment that the school's giving you for financial aid. Okay. Now, when it comes to student loans, there's different types of student loans. So once you get that package, you're going to want to see which student loans are being offered to you. Is it a Stafford loan? Is it subsidized or is it unsubsidized? Or is it a both? Do you have a mixture of both? Is there options for a PLUS loan or a parent loan? Is the Perkins loans offered to you? Or do you have to go out and get private loans, which tend to have higher interest rates? I think the interest rate should be the focus of your financial discussion when looking at these packages, okay? Is interest being accrued while you're in school? Or is the interest deferred to after you graduate? Is one of the big questions you should be looking into when you get your financial aid package. Secondly, if you're taking out private loans, is there a way for you to try to work the loan down? Can you call them up and try to lower the interest rate, from 6% to let's say 5%? Okay? You should be trying to get as low of an interest as possible and as flexible of interest rate where they're not, hopefully not, it's not accruing interest while you're in school. Which professionals should help you, right? So you should have a few people on your side. The college advisor or the counselors at your school should be there to assist you, to give you the most up-to-date information. These are the people that are going to have the latest information in the college process. They can help you fill out the forms and they can keep you abreast to deadlines, okay? An accountant. Very few people do I see using this resource, but an accountant tends to be really, really busy up until around April 15th. But most of your packages may not be due unless you have some type of early action or early decision situation. Most of your packages may not be due until May 1st. So I think accountants have a lot of room for business growth in being able to look over these financial aid packages and assist people on a case-by-case basis where they give you the pros and cons to the different types of loans being offered by the schools and can give you a more accurate projection as to future income. Accountants are typically doing or looking at tax returns and trying to help professionals with financial advice. It would be great if we can get them more involved, and you can get them more involved in the process before you even enter the college, so that they're out there and they're looking at packages, giving you projections based off income and based off your career choice way in advance. Additionally, you're going to want to keep in mind that although they can give you some projections on future career paths, many students enter college and change majors. So that's one hurdle that you're going to want to keep in mind. Additionally, you're going to want to look into any state-offered programs. For example, New York. New York has an Excelsior scholarship. However, The Excelsior Scholarship has several clauses. So you're going to want someone who's well-versed, so like the counselor or the accountant, who can look over the fine print and tell you exactly how committing yourself to this type of scholarship would impact you. For example, you might have to stay in the state for a certain amount of years. You may have to give back depending on what state is what a particular state is offering. So they can look it over and give you the case-by-case advice. But should you take out the student loan, right? Should you go out and take out student loans? Well, it depends. You're definitely going to want to do as much work up front to minimize the student loans. So in your junior and senior year, you should be applying like as much as possible to scholarships, right? There's plenty of money out there for students to apply, okay? So you're going to want to maximize your effort and put as much of your time into getting those scholarships that will reduce the cost of attending a school. You're going to want to see if in that package, right, you qualify for work study. So some people are like, oh, my parents make too much, I'm not going to get any type of aid. Still do the FAFSA because you might get work study, okay? You might not get a full financial aid package, but you might qualify for work study. What is your future ability to pay back the loan? One big mistake I see is that people they take out huge loans for jobs they know are very low paying jobs. So that may not be a wise decision if you can attain that certificate or degree at a school where the tuition is significantly lower. You're not going to want to go to the most expensive school for a job that's going to get you $40,000 coming out of college. That may not be, at least from a financial perspective, a wise decision. Understand the loan terms. So you should go into this process understanding the loan terms. Now, that's difficult because most people applying to student loans are 18, 19 years old, and it's not something that many students possess, to be able to look into the student loan terms. That's why hiring a professional like an accountant in your area may be wise, because they're going to be able to save you a lot of time. They're going to know the terms, and they're going to be able to explain it at a much more efficient level than possibly the counselor, the financial side of it. Additionally, when you're looking at paying for college, find out if anyone opened up a 529 plan for you, or if there was a Coverdell savings account put in your name. So these two accounts can potentially pay for your college, right? So if your parents or your grandparents had one of these accounts in your name, obviously you may not need a student loan, or it would reduce the amount of student loans you need, right? I don't recommend you taking out a bunch of student loans to go out and party, right? From a financial perspective, that sounds like a disaster. So, additionally, some people can't afford college. I was one of those students who I grew up in a low-income family, and I would not be able to afford college unless I went part-time and worked. And that's great if you do that. However, I think that there is tremendous perks to getting the college done early, in 2-4 years, whatever it takes to get it done as fast as possible, because you dramatically increase your income in most cases. Let's use a simple example of a teacher. So what I have in front of you is the New York City UFT teacher contract, okay? And in this contract, if you look at the 1A, which is a BA, a bachelor's degree, so a first-year teacher with a bachelor's degree, and as of June 2018, can make $56,000. Well, in New York City, next year, in 2019, the minimum wage is going to be $15 an hour, or it's going to take steps towards $15 an hour. Even at $15 an hour, if you're working full time, you're only making $30,000, around $30,000. So if you're able to complete this degree in 4 years and start off teaching right out of the gate, you're going to be making about $25,000 more once you finish per year. So you're able to catch up quickly in whatever student loans you took. Okay, ideally, you would catch up quickly. So it just makes sense to get the college done and out the way so that you can start making more income. Okay, that's going to link to the next video where I'm going to be talking about, once you have these student loans, what are some unique ways or strategies as to whether you should pay them off or maybe not pay them off. So please stay tuned and look into my second video regarding student loans. Lastly, please subscribe to the channel and send comments and suggestions. This video was created for educational purposes. Please consult with your local professionals for any case-by-case financial assistance.